Welcome to One Vision Capital's Guide to Investing in Multifamily Apartment Syndication, Module 1. Real Estate Syndication Investing 101, an intro to syndication deals and how they work. Many real estate investors get their feet wet in some form of residential real estate. Whether those initial investments are fix and flips, standard rental homes, or duplexes, that's a great start. We recently met somebody who's been in the real estate game for 10 years and had never heard of real estate syndications before. That's because you had to be part of an inner circle. You had to know somebody who's doing a deal in order to invest in one. The SEC now allows certain opportunities to be publicly advertised, which opens up the gates for more people to learn and invest. Maybe you're new to this term and are wondering things like, what is real estate syndication? How does real estate syndication work? What would an example of real estate syndication look like? Let's start with the basic terms. The term syndication means pooling of resources. A real estate syndication is when a group of people pool their funds and expertise together to invest in a real estate asset as a group. Instead of buying a bunch of smaller properties, as individuals, they put their funds together and buy a larger asset. Let's pretend you have $50,000 for investing, beyond other savings, retirement, and emergency funds. You can invest in an individual property. That would also require time to find a property, negotiate the contracts, do the inspections, run the numbers, get the loan, plus find the tenants and manage the property. That's a lot, but it's likely you don't have the time or energy to deal with such an obligation. This is where most people assume real estate investing is too hard and takes too much work, so they stop right there. Real estate syndications are an alternative that allow you to still put your money into real estate without having to do all the work of finding properties yourself. So let's say you contribute $50,000, maybe a friend has another $50,000, and somebody puts $100,000 in, and so on. By pooling resources, the group will now have enough to buy not just a rental property, but something much bigger, like an apartment building. As a passive investor, you don't have to do any of the work managing the property. A lead syndicator or sponsorship team does the day-to-day management, all the active work, and in return, they get a small share of the profits. There are two main groups of people who come together to form a real estate syndication: the general partners and the limited partners, which are the passive investors. The prior section mentioned a team that will take care of all of the day-to-day management in exchange for a small share of profits. That syndication team is made up of general partners, or GPs. They do all of the legwork, finding and vetting real property, and creating a business plan. Essentially, they do all the work that you would be doing as an owner or landlord of the rental property, just on a massive scale. The limited partners, or LPs, are the passive investors, others like you who invest their money in the deal. Limited partners have no active responsibilities in managing the asset. A real estate syndication can only work when general partners and limited partners come together. The general partner finds a great deal and puts together an efficient team to execute the intended business plan. Limited partners invest their personal capital in the deal, which makes it possible to acquire a property and fund the renovations. Together, the general partners and limited partners join an entity usually called an LLC, and that entity holds the underlying asset. Because the LLC is a pass-through entity, you get the tax benefits of direct ownership. During this time, the limited partner investors receive regular and ongoing cash flow distribution checks, usually every month, sometimes quarterly. Once all the planned renovations are complete, the general partner sells the property, returns the limited partner's capital, and splits the profits. So, why should you invest in a syndication? Here are a few of the top reasons. 1. You want to invest in real estate, but don't have the time or interest in being a landlord. 2. You want to invest in physical assets as opposed to paper assets like stocks. 3. You want to invest in something that's more stable than the stock market. 4. You want tax benefits that come from investing in real estate. 5. You want to receive regular cash flow distribution checks. 6. You want to invest with your retirement funds. 7. You want money to make a difference in local communities. Here's an example of what real estate syndication deals would look like. Let's say that Jane and John are working together to find an apartment in Dallas, Texas. Jane lives in Dallas and she works with a real estate broker in the area to find a great property that meets her criteria. After looking at a bunch of properties, they find one listed at $10 million. John takes the lead on underwriting or analyzing the deal to make sure it would be profitable. And they determine this property has a ton of potential. Since Jane and John don't have enough money to purchase a $10 million property themselves, they decided to put together a real estate syndication offer. They create a business plan and investment summary for prospective investors and work with a syndication attorney to structure the deal. Each passive investor invests a minimum of $50,000 until they have enough to cover the down payment as well as the costs of renovations. During this time, Jane and John send out monthly updates as well as monthly cash flow distribution checks to their passive investors. When the renovations are complete, Jane and John determine it's a good time to sell the property, and it goes for $15 million just after 3 years. Each passive investor receives their original capital plus their split of the profits according to the original deal. In this case, a 70-30 split was agreed upon at the outset of the syndication. 70% to the investors, 30% to Jane and John. At this point, each passive investor has received monthly cash flow checks during the renovation period, plus their initial capital investment back once the property has sold, including their portion of the profits from after the sale. Now that you know the ins and outs of real estate syndication, including what it is, how it works, and how little effort it requires on your part. Also, how simple it can be for you to begin receiving your first passive income checks. We always recommend you research until you're comfortable, and that not all your eggs are invested in one basket, so to speak. Now that you're armed with this knowledge about real estate syndication, you're now miles ahead of most other investors, so keep at it.